Have a look at this Heiken Ashi chart. We have an aggressive down move, then a quick reversal to the upside. But there's a specific price action signal during this period which revealed sellers were no longer in control. Can you spot it? It's right in the middle. 3 consecutive lower wicks which revealed bullish pressure around this price level. This is one of the best ways to anticipate a change in momentum with a low risk and a potential high reward. Let's talk about it. You know the drill. Like, subscribe, and stick around for the full video. Candlestick wicks can tell you a lot about the psychology of market participants, and it definitely must play an important role in your price action analysis. In a Heiken Ashi chart, large wicks can indicate a high level of volatility or uncertainty in a market. For example, if the high and low prices for a particular time frame are significantly different from the open and close prices, it may indicate that there was a lot of buying and selling activity during that period. This could be a sign that the market is indecisive or that there is a lack of clear direction. On the other hand, if the wicks are small or absent, it may indicate that the market is more stable. A series of candlesticks with long wicks on a Heiken Ashi chart is something you should pay attention to, because this can potentially indicate a change in trend. So the plan is to look for periods when momentum is fading away and a potential trend change is on the way. In a Heiken Ashi chart, trend changes can be identified by looking at the shape, size, and direction of the candlesticks. For example, in this chart, we are in an uptrend, but the candlesticks start to become smaller and more evenly sized. This may indicate that the uptrend is losing momentum and the trend change is imminent. The same here, the market was in a downtrend and the candlestick started to become smaller and more uneven. And this is the first sign that the downtrend is losing strength and a trend change is coming. Consecutive candle wicks during this period reveals bullish or bearish pressure. Now, a strong Heiken Ashi pressure zone is not defined just by one candle with a big wick. A single price bar might not be sufficiently reliable for a trading setup. To filter false signals, you must identify a group of candlesticks. Therefore, instead of a single Heiken Ashi candle, look for at least 2 consecutive bars with overlapping upper or lower shadows, more even better. Remember, wicks indicate potential buying or selling pressure. When these shadows overlap, they create a price zone that is more likely to exhibit the buying or selling pressure you anticipate. Here's a bullish pressure zone. We have 3 consecutive Heiken Ashi bars with overlapping lower shadows. We mark the zone by outlining the lowest low and the highest closing price. This area is the bullish pressure zone. Now, very important, small shadows can create unreliable pressure zones. The wicks of the candles must be somewhat larger in size. I wouldn't say this is a strong buying zone. The wicks are too small. This one is more significant. And here's a bearish pressure zone. We have minimum 3 consecutive Heiken Ashi bars with overlapping upper shadows. We outline the highest high and the lowest closing price within this sequence. This area is the bearish pressure zone. It's also important to note that these consecutive wicks in Heiken Ashi charts should not be used in isolation. It's always a good idea to use multiple tools and indicators and to carefully consider the overall market context when trying to identify the potential trend reversals or changes in market sentiment. So instead of taking signals and trades all over the place, the better trades usually happen at key price levels and are followed by an opposite color candle. Here's a bullish pressure zone. These consecutive Heiken Ashi wicks indicate sellers are losing their strength. On its own, this zone is not relevant, but it appeared at an area of previous resistance, which turned into support. And this is important. These candles were followed by a green Heiken Ashi one, which also has a lower wick. This is a weak buy signal. The strongest signals appear when a green candle with no lower wick appears. A good entry area is after you have the first green Heiken Ashi candle rejecting the bullish pressure zone. Stop loss placement is obvious below the zone, and you target double the amount you've risked. Here's pound dollar on the hourly time frame, with several bullish and bearish pressure zones. First one is a bullish zone, right here. 3 consecutive candles with lower wicks, followed by a green candle. This is a weak signal because the signal didn't appear at a clear support level. The second signal was here, a bearish pressure zone, which was located around the same area. A previous support turned into resistance, and multiple Heiken Ashi wicks. We have a short trade signal when a red Heiken Ashi candle forms. Stop goes above the pressure zone, and as usual, you go for a risk-to-reward ratio of 2. And I see another bullish zone, again around the same area. Previous resistance turned once again in support. Consecutive long wicks. So this was a good opportunity to buy when a green Heiken Ashi candle formed. We even had the green candle with no lower wick, which is the strongest signal. Again, stop loss below the zone, and you go for a risk-to-reward ratio of 2. Now, as a side note, you decide how you want to manage your trade. I recommend to wait for the trade to unfold, but if you want to minimize risk when the Heiken Ashi change color, you may also decide to move your stop to break even, or you may even decide to close 50% of your trade manually if a red candle with no upper wick appears. There is no best way to manage your trade. In some cases, it's better not to close the trade when an opposite candle appears. In other cases, this action will preserve your profit. One of my favorite ways to trade bullish and bearish Heiken Ashi zones is with weekly VWAP. Not many traders are using the weekly VWAP. They don't even know it's possible to add it on their charts. But this is one of the most reliable tools, offering dynamic support and resistance. VWAP line acts as a support if price is trading above it, and as a resistance if price is trading below. The advantage of this strategy is that it places less emphasis on the length of a single shadow and instead focuses on multiple shadows. You want to find bullish pressure zones above the weekly VWAP and bearish pressure zones below it. In this example, I see a very good signal. First, as price is trading above the weekly VWAP, you need to find a buy zone, which is right here. Multiple red Heiken Ashi candles with lower wicks, right at the VWAP line. And as another layer of confluence, I also see this support or demand zone right here. Stop below the VWAP and below the multiple wicks, and you take the profit at the next major resistance level. We trade pound dollar on the 15-minute time frame. Price is below the weekly VWAP, so the plan is to short the currency pair at the bearish pressure zone, which is right here, a triple wick zone right below the VWAP line. This area is an important one because I also see a support zone turning into resistance. Multiple layers of confluence around the same area, so we found our value zone. The next red candle after the pressure zone is our trigger to place a short position. Stop loss above the wicks and take profit at the next swing low in the price structure. Now, I suspect our entry level also aligns with the Fibonacci level. Just as I thought, it was the 50% Fib retracement, another layer of confluence. Heiken-Ashi pressure zones work extremely well in combination with psychological numbers. Have you ever wondered why prices tend to stall at certain levels in the market? Is this just a coincidence, or is there a valid reason behind this happening? Well, this phenomenon may actually be explained based on the psychology of traders. As humans, we tend to think in terms of whole, round numbers rather than in terms of uneven, random numbers. Psychological numbers, also known as round numbers, are numbers that end in zero, such as 50 or 100. These levels go under the radar of many traders, but these are very important in trading because they are often used as reference points. Traders are more likely to take action when prices reach these levels. They are more likely to place orders or set limits at round numbers, which can create additional demand or supply at these levels. In this chart, I see a bullish pressure zone. 3 red Heikin-Ashi candles with lower wicks forming at the round number. We even have a support level in this area. This is a good opportunity to place a buy trade. This strategy is quite versatile, and you can trade it on any time frame. I must say, I prefer it on higher time frames. By looking at higher time frames, you can get a sense of the overall direction of the market with the help of Heikin-Ashi, and at the same time, you identify pressure zones that may not be visible on shorter time frames. One of the main benefits of using higher time frames for finding pressure zones is the fact they can help you to filter out the short-term noise. For example, here we are looking at the 4-hour time frame. First, we see fewer price fluctuations compared to someone looking at the 5-minute chart, and it's easier to identify major support and resistance levels. Consecutive wicks on lower time frames are quite common. It happens all the time. But on higher time frames, this has more relevance. And on higher time frames, psychological numbers are more obvious. Usually, the more zeros at the end of the price, the stronger the psychological level. In this chart, we have a perfect textbook example. 3 consecutive wicks forming our bullish pressure zone, appearing at a major round number, 200. I will take this buy trade every time I'll see it. As you can see, the location of the pressure zones in the market is probably the most important factor to consider when trading, as it can provide context and will help you determine the likelihood of the signal being accurate. For example, a bullish pressure zone that occurs at a key support level is more reliable than a zone that forms at a resistance level, because the support level suggests that there may be a greater demand at that price. The location of the pressure zones can also be important in the context of the trend analysis. A buy zone that occurs during an uptrend is more reliable than one that occurs during a downtrend, as it's in line with the overall direction of the market. Follow these rules, find the zones on higher time frames, and you'll see you'll have stronger and more reliable signals. Now, this strategy works perfect in combination with supply and demand levels. If you want to learn to trade them on Heikin-Ashi charts and not on classic candlestick charts, you definitely must watch this video. And also check out our Academy program if you want to further level up your trading. Until next time.